All right, guys, here we go. What is it? It's 10:05 a.m. Eastern. Hope everybody's having a great day. So far, it is hot. It is very hot here in York, South Carolina. Took my dogs for a walk this morning, and they had to go back immediately. Like it was like a half a mile before they just turned around. They're like, "Nope, not for us." So usually they're really good. Usually we do 2 to 3 miles per day, but today the dogs were like, "No, no, sir." And you can probably hear them in the background panting. Let's see. So today it is supposed to be up to 100 degrees. That's insane, right? 100 degrees, and my AC feels great for all of my European friends. So, but anyway, I wanted to hop on here and answer any questions that people would have about life insurance, especially senior citizens for today. Although I can answer any questions about term life insurance or life insurance for parents, but senior citizens really have the raw end of the deal as far as looking for life insurance. There's all these advertisements that say, "Hey, there's a free 25,000 or a free $40,000 life insurance policy out there for you." A lot of times these marketers, they will link themselves to an authority, like the Social Security Administration. So you'll see advertisements like the Social Security Administration has just authorized a free or a burial benefit that your family could be entitled to. They can receive money without taxes, tax free money. So you see a lot of that. You see a lot of advertisements that say, "Hey, you can get a quote now," but what they really do is get your information. And the reason why they do that is because your information is valuable, right? So if you are looking for life insurance, these are marketers, by the way. You typically those advertisements don't come from life insurance agents; they come from marketers. So their entire goal is to get your information, right? So they'll present something that kind of looks like life insurance, maybe it's not. They want you to fill out the form or call them. So if you fill out a form and they get your name, your phone number, what they do is they take that information, but they take your information and they'll sell it. So they probably got your information from anywhere from $4 to $5, and they'll sell it for to anywhere from $20 to $30, depending on how much information's in that form. So if you put in your name, your address, your phone number, your beneficiary, your health conditions, how much you're looking for, they probably sell your information for about $30. And they don't sell it to one person. They usually it's sold to multiple people, and that's why you get so many phone calls. That's why people think life insurance is horrible, and it is, right? Looking for life insurance is one of the most annoying things that you could do if you don't know how to do it, because one, the advertisements are fake, most of them. The agents are going to call you nonstop, and since they spent $30 to talk to you, if they can talk to you, then they're going to push for a policy because you're not the only person that they got information about. Typically, an agent will get around 100 leads per week. So you got to think about it. They're starting with like $3,000 in the hole, so their incentives is to recoup that loss as quickly as possible. I prefer to do it this way, to go online. If you have any questions, I'd be more than happy to answer them. So one thing that I would do, like if I was a senior citizen looking for life insurance, the first thing I would do would be to figure out what I want to cover. Like, and start with the basics, start with the funeral or the cremation. So if you want to cover the cost of a funeral, I would start with maybe $10,000, work my way up. If you're looking to cover the cost of a cremation, you can start as low as 3,000. I would recommend 5,000 and then work your way up. So my recommendation is to get the price for what needs to be covered first, and if you want to add additional coverage, you can, because a lot of these advertisements, they tell you there's a 50,000 or $40,000 policy available, and that is true. You can get 50,000, $40,000 in coverage, but typically, if you're 65 or older, you are on a fixed income, a limited income, so every penny counts. So if you get the price of a $50,000 policy, you're going to be a little bit shocked about how much it's going to cost, especially if you're over 65 years old. For example, this is a tool that life insurance agents use. It's designed to shop from multiple carriers. So if you know a broker, this is the tool that they use to find out like all the different prices for all the different carriers. So in this example, I'm going to look for a 65-year-old woman for $50,000. See, and this is why I recommend not going for the $50,000 first. So this is a healthy woman, no medications, no health issues, and the lowest price is 160.6502 for $50,000 worth of coverage. My recommendation would be Mutual of Omaha for 192, but you see the prices for $50,000 worth of coverage. In the advertisements, they don't tell you the prices for the $50,000 worth of coverage. They just say plans start at $995 a month, which means that, if you put in $995, how much could you get? A lot of carriers won't go that low, but $2,000 worth of coverage. So that's the least expensive one. So my recommendation is to start with what you need, which for funerals, most of my clients who are looking to cover the cost of a funeral, typically they start anywhere from $10,000 to $12,000 depending on the area. And so $10,000 worth of coverage for a 65-year-old female, we're looking at around between $30 and $41, $36 and $41 a month, which is a lot better, right? So if you get that plan in place, you've got your burial covered. And then if you needed to add more, you can. My recommendation is not to overspend on life insurance unless you have to. So we'll take this example. Let's say we even go up to $15,000 for a 65-year-old female. That's still only going to be between $50 and $60 a month. That is where I would start with if you're 65 or older. If you're 70, once you get over 75, that's when the prices really start to spike. So if we took a look at this, so let's say we went to the age of 75. If you're 75, it's going to be a lot more expensive. You're looking at like $100 a month. That's for the 15,000. So for the 10,000 is where I start. Like you're going to get your family at least half the way there, or most of the way there. So I'll start with 10,000. That's going to be between $60 and $73 a month. I would always go with Mutual of Omaha, but that's where it would be for the female. And for the male, we're gonna have to adjust the height and the weight, but we can do that. So for 65-year-old male, what we're looking at is going to be a little bit more for $10,000 worth of coverage. You're looking at roughly not $100 a month, right? That's just because men don't live as long. We do a few more crazy things. That's for someone 75 years old. Now for 65-year-old, which is the age I would recommend looking into this, I would recommend getting a policy at 65. Once you retire, just get a policy that's going to cover your burial cremation. That was where I would go. And you're looking at between $40 to $56, between $45 and $56 for enough coverage to cover the cost of your burial or cremation. So now let's say you don't know how much it's going to cost for your burial cremation. There is a phenomenal website that I really like, where you can go to and they'll tell you how much the cost of burial or cremation is in your area based on the funeral home. So for example, I am here in York, South Carolina, one of the best cities in the country. And what I've got, I put in my zip code on this website. I'll include this in the chat so you can have it. No charge for that, by the way. It's absolutely free. Okay. I'm going to pin this. I'm going to pin this message so it'll be there. So you can get to that website yourself, all 0 people of you. And, oh, I unpinned it. I am not very computer savvy today. But anyway, so I go to this website, I put in my zip code, and you see it pulls up funeral homes in York, South Carolina. So I can scroll down. My family typically uses the same funeral home. So I'll scroll down until I find that one. And that is Green Funeral Home. We've had several family members use that funeral home. So you can see the price over to the side. You click on that price, and it's going to bring you up a list of their services. There's the traditional full service burial. That's where they take your body from the funeral home, or they take your body from the hospital, or or a coroner, and they transfer it to their place. They do the embalming, they do the hair, the makeup, caskets included in this price. They transfer you to the cemetery. There's a service involved, so it's a full service burial. The only thing that doesn't include typically is the cost of a headstone, which most families do later, and the cost of the plot itself. So I would probably add in anywhere from $15 to $2,000. So that's where the $10,000 comes into play. So that's $10,000. The full service cremation is almost exactly like the full service funeral. They do cremate you, so you still get the transfer to the funeral home. You still get the embalming. You still get the makeup. There's a service. There's visitation before the cremation, but instead of being transferred to a cemetery, you're cremated instead, and that's around $5,500. And then the affordable burial. This one doesn't have a service. I don't think there's visitation. Essentially, they just take you to the funeral home, and then you can maybe have a memorial service at a church or something like that, and then you're transferred over to the cemetery. So that's around $4,500, $4,400. And then there's the direct cremation, which is essentially they get you from the coroner or from the hospital, and then they do the cremation, and then they provide your family with the ashes. In that situation, also, it would be good to have maybe a memorial service at a church or some type of family gathering. So these are the prices. This is where I would start, right? If I'm looking for final expense coverage, this is where I would start. The prices I would start with. I wouldn't start with the 50,000, the 40,000, the 30,000. I would start with what's needed first, and then see what that price is. See if that's a comfortable price for you. And if you want to add more, you can. But a lot of people, like, they see these advertisements for the 50,000, the 40,000, and then they get that price and they're like, no, this is just not right. Yeah, you don't need that. So you can work up to that if that's something you want to do. But as far as like making sure your kids don't have to pick up the tab, this is where I would start. This is what I kind of focus on. I'm not focused on getting you the $50,000 policy unless it's something you absolutely want, need, and can afford. I'm more interested in getting you the stuff that you absolutely need. So this is where I would go. Funeralocity is a great website. Um, so who are the people who need it? I would say the people who need final expense coverage, and I'm a little bit of an outcast when this is concerned. I think it's the people who need final expense life insurance are the people who can't comfortably afford to cover the cost of burial cremation today. Maybe you're on a very fixed income. It happens. A lot of people are. And you can't, like, if you were to pass away today, there wouldn't be enough money in your checking or savings account to cover the cost of it. And not only that, that's just one criteria. Another condition would, for me personally, would be if your kids couldn't also cover it comfortably, or if that's something you didn't want them to do. I spoke with a lady a few months ago, 70, she was in her 70s, I believe, in Florida, and she was very active. She did yoga, she did like hiking, very active for someone over 70. And she was on a limited income. Like, I think, she was in a retirement community. I believe most of her money went towards the retirement community, and she had some money left over at the end of the month. When I was talking to her, she said her daughter was a traveling nurse, and they make a lot of money. So my biggest question was like, okay, if she's a traveling nurse, why are you taking up the bill for this? I mean, what makes you want to do that instead of having her do it? You know, and so she called her and she's like, yeah, I got you covered. And that's great. So she didn't have to worry about that. So that would be another thing. Like, if you don't have the money to cover the cost of the burial cremation and your kids can't, or you don't want them to, then that would be the need factor for me. Um, but yeah, it's really simple to get life insurance. Unfortunately, for senior citizens, fortunately and unfortunately, there are a lot of options, which can be confusing too, right? There's just a lot of options available for final expense. Uh, and depending on your health, the type of issues you have with your health, and the type of medications you're taking, different life insurance carriers look at that differently. So it's not as easy as a younger person looking for a term policy. It's a lot more complicated. It's a lot more in depth. That's why I recommend working with a broker. Even though I know you don't like phone calls, you don't like the spam, you don't like all of that stuff, I recommend working with a broker who has access to multiple carriers. One thing I can tell you is typically most carriers today, they don't look at high blood pressure, high cholesterol, or controlled diabetes as a major weakness, right? Like it's pretty much standard issue today that most people are going to have high blood pressure, high cholesterol, and controlled diabetes. And when I say controlled, that means there's no diabetic neuropathy, there's been no amputations, no additional complications due to diabetes. It's just like you've got a little high blood pressure or high blood sugar, and you're taking some medications for that. So once you add on additional medications, maybe for like some kind of liver issue or heart palpitations, or if you're using oxygen, that's where the number of life insurance carriers really is reduced to a certain niche of carriers. So that, my recommendation is to work with a broker who can kind of guide you through that. For example, high blood pressure, high cholesterol. Let's do a quote for a $15,000 policy for a female that is 65. And we're going to say, for the sake of example, that she does, in fact, have, she has high blood pressure, high cholesterol, and controlled diabetes. So right now, our quote for, oh, we did too much there. Let's say we're looking for $15,000 worth of coverage, or in fact, let's go to 20,000. We'll say that $20,000 is in her budget. So we're going to go and take a look at $20,000. So we're looking at between $72 and $79 for 15,000 for $20,000 worth of coverage. And let's say she's got a few medical conditions. She's got maybe high blood pressure. All right, here we go. High blood pressure, controlled high blood pressure, high cholesterol, controlled, and she's got diabetes, no complications. So there's no complications with the diabetes, the high blood pressure is controlled, the cholesterol is controlled. And we're going to take a look and see if we can get a quote here. And it looks like the price hasn't changed, right? $72 to $78, because most life insurance companies today realize that there are a lot of people with high cholesterol, high blood pressure, and diabetes. They've had a chance to update their morbidity tables since the 80s, and due to advances in medicine, it's not a massive deal anymore. Now, if you were to have something like diabetic neuropathy, that's where it would potentially impact you. So that's where the carriers would change. So we'll go from 72 to 78 to, it looks like it's 75 to 98. So that's why I recommend, like, if you're looking for life insurance and you don't have anything above high blood pressure, high cholesterol, and controlled diabetes, if those are your biggest illnesses, my recommendation, and just me, would be to go with Mutual Omaha, right? They're going to, they don't have the lowest prices. They're not the cheapest. They're not the most expensive by any means either. They're somewhere in the middle. They're on the as far as price is concerned, they're on the low end of the middle section, but it's not that much different. So, and they're fast, they're easy, they're a great company. But if you have anything beyond that, that's where I would go with a broker. I would check with a broker. So that's pretty much what I have for that. It's fast, it's easy. A lot of these applications, if you do it online, it's going to require some kind of electronic signature. So if you are working with an agent online, just be aware of that. But it's really not that complicated. So high blood pressure, high cholesterol, controlled diabetes, those aren't major issues anymore. Now, at the time when you get the 2-year waiting period, like if that's something you've gone through before, where you have to wait 2 years, it's going to be something like maybe diabetic neuropathy with the kidneys, or congestive heart failure, or you're on oxygen, or there's been an amputation from diabetes, you've had a heart attack or stroke recently. Those things will trigger the 2-year waiting period. And there's not many carriers that will not have you wait 2 years if you've had like a heart attack or stroke recently. Let's see. We'll do a heart attack, and we'll say that it happened. Well, happened in March. Okay, and we'll take a look and see what we've got here. Uh, or not ethos, but you can see Mutual Omaha is pretty much just off that list. There are other carriers out there. See modified. If you see something that says modified or guaranteed acceptance, that means there's a 2-year waiting period. Like with Colonial Penn, it's a good company. I think their prices are a little higher than other guaranteed issued companies, and I'm not a big fan of their marketing, like the 995. It is true, it's 995, but it's per unit, and that unit is based on your age. So 995 when you're 50 might buy you $1,600 worth of coverage. 995 when you're 85 might buy you $300 worth of coverage. So that's one of the aspects of them that I am not a huge fan of, but I've never called them, but I'm assuming that they explain that to you when you purchase the policy. And that would be another thing that I would kind of look out for. So if you're looking for life insurance, right, and you get the prices, let's say you're shopping around yourself. I don't recommend that at all. But let's say you're doing that. You call maybe 4 or 5 different companies or agents, and you get prices, and then they're all similar. They're very similar, like maybe between $10 to $15 difference. And then all of a sudden you talk to this one agent or one carrier where it's like $30 or $40 difference. Like it's a big difference in price. Now, one thing that I would ask is, are you looking at the same thing? Because you might not be looking at the same thing. You're probably not looking at the same thing. For this, like most whole life insurance policies are going to be roughly the same. There's going to be a little bit of an exception, but most of the policies are going to be roughly the same price. Now, if you see something that's like drastically different, then I would make sure that your agent explains the policy to you completely. Make sure it is a whole life policy. Make sure there's no 2-year waiting period. Make sure the price isn't going to increase. I would check that, or have someone else go through it with you. So that brings it back to the importance of working with someone that you can trust, someone who's going to actually tell you what you're getting. Let's see. There we go. I just want to take a look at some of the advertisements online here. All right, since I am getting no traction on this, there's no one that's curious about life insurance at all. All right, so let's see if there's anything on Facebook. I don't engage with these posts. Now, here's the thing, like why you don't submit those online request forms for life insurance. Because they get your information, they call you nonstop, right? It's the same thing with Facebook posts. Like if you post something online about life insurance, you're going to have 30 or 40 agents in your messenger before you know it. And a lot of content creators have figured this out. A lot of content creators have figured out that, hey, if I need some engagement, what I can do is ask about life insurance, and I'm going to get 50 to 100 different people commenting on my post. So just be aware of that. Do not ask about life insurance online. If you do, limit it to your friends and family, so no one outside of those can see it, because life insurance agents can be a little bit stalkish. So I'm going to go through here and see if there's any questions online. Okay, so a lot of this is just life insurance agents trying to get you to get life insurance, which is fine. I mean, hey, everybody needs to make a living for sure. Oh yeah, let's see. Shelby Matlock. It looks like she's a life insurance agent. Excuse my long rant, but this needs to be said. It blows my mind that so many people think nothing of paying $300 a month for health insurance or $400 a month for auto insurance. But the moment someone mentions spending $50 on life insurance, then suddenly it's too expensive. Yeah, I mean that happens, right, Shelby? I mean, she might be new. I don't know, but yeah, a lot of people don't think about life insurance. My primary focus, seniors, and I'm trying to do some stuff for you here today. My primary focus is people with young kids, like people with kids under the age of 18. Those are the people that I really like working with just because that they need life insurance more. But yeah, it's $50 a month. Like if you're 35 or 40 years old, you can get a good policy for around $50 a month. Sometimes it's like 25, sometimes it might be 75 or higher depending on, your health and how much you choose. But yeah, that's it. That's it. I would typically I don't like my clients spending more than 50 to $75 a month on the high end. Uh, so yeah, a lot of people just don't think about it. I think it might be that issue of mortality. No one wants to think that they're not going to be here. But yeah, everybody is going to die. Like you're going to die, and everybody you love will eventually die. So to me, $50 a month is not expensive for life insurance at all. Like I gladly pay $50 a month. So let's see what else we have here. All right, so this could be one of those people I was talking about where they're just trying to get engagements. Please, good morning. Please help me understand how life insurance policy works. What was told to me is that you have to pay out of pocket to the funeral home once your loved one's buried, then you get the insurance money. This might actually be a legitimate question. What's the period of having uh, what's the period of having life insurance if the funeral home doesn't take the policy? They want their money. Everybody doesn't have the type of money to bury their loved ones. Do you have to keep the body out for 30 days until it's cleared? Okay, this is a great question. I don't think this is actually an attempt for engagement. All right, so when you pass away, right, what happens is you get to the funeral home. And once you're at the funeral home, they do all their stuff, they get through the process. And if you don't have the money to pay then, typically most of them are really good about it. If you tell them you have a life insurance policy and that's how it's going to be paid, they might ask for a small deposit. Typically, they'll waive it if they know the family. If you've used it a lot of times, they'll waive that down payment. You just show them a copy of the policy, let them know you're in the process. They go through the service. You fill out the death certificate, and then the life insurance company will pay you within typically a week. I mean, some of them can take longer, but typically it's around a week once they get the death claim. There are a few carriers that specialize in paying out ahead of time. They're a little more expensive. One of them is Lincoln Heritage. Lincoln Heritage is a little pricey. It's a great company. I don't work with them, but they do have a funeral concierge program where like they just need to get a certificate, or not a death certificate, but they just need to get some kind of notification from the attending physician that you have passed away. They verify your social security number and everything, and typically they have the money in your account between 24 to 72 hours. So that's one option. But most funeral homes are really good. For example, my friend, his mom or his dad passed away last year, and they knew the family because that's the funeral home they used, and they were like, just we'll wait until the life insurance comes in and we'll take care of it then. And they did, and the same thing happened. Unfortunately, his mom also passed away this year, roughly 6 or 8 months after his dad, and they did the same thing. So most funeral homes, they understand the cost, they understand the process, and they're more than willing to work with you. So let's see. Generally makes you sick how many children I know walking around without life insurance. Okay. All right. This is her name is Marijuana Williams. Okay. So Marijuana Williams genuinely makes me sick to think about how many children I know who walk around without life insurance protection. Okay, yeah. I mean, yeah, like kids, yeah, they should have protection. With the term company that I use, that I recommend, that I work with nearly exclusively, they have a they have a policy for adults, and then you can add your kids onto it. I think up to $10,000. It's like maybe an extra $4 or $5 a month, but your kids can get $10,000 worth of coverage, unlimited number of kids, as long as they're older than 6 months and I believe younger than 18. I believe those are the restrictions. And that policy will last them until they are no longer dependent on you or until you reach the age of 65. So the biggest thing in my opinion, Marijuana Williams, is the fact that there are a lot of parents walking around without life insurance. It doesn't make me sick, but it makes me sad because like if there's a father or a mother out there working 60, 70 hours a week, and one of them goes away, like it's going to be a massive impact, like massive. I mean, you can get 50,000. You might have a $50,000 work policy, but how long is that going to last after a funeral? You got $35,000 left. Is that going to last like 6 months? If you stretch it really far, maybe a year. Maybe you can get the leftover money to last a year. But after that, the mortgage isn't going to stop. The car payments isn't going to stop. The insurance isn't going to stop. The cell phones, the lights, the groceries, after school activities is not going to stop. And a lot of parents pass away way too soon, way too soon. This week, earlier this week, one of my friends, one of the friends of the family, really close friend of the family, she 40 years old, mother of three. The kids are at camp, three kids at camp. Uh, I believe her and her husband had dinner. It was around 5 o'clock. And she's like, I'm a little tired. I'm going to go upstairs and take a nap, and I'll be back downstairs to watch TV. And then, her husband's watching TV. Hour passed. He's probably like, okay, well, I'll let her sleep a little bit longer. And then it was like 7 o'clock, and he went upstairs to wake her up. 40 years old, by the way. Went upstairs to wake her up, and she was gone, just gone. So um, there was no health issues that anyone was aware of. Nothing like that. It was just she went upstairs to take a nap, and she did not wake up. 40 years old, mother of three. Husband's now got all the responsibility. He couldn't, due to the time, he didn't tell the kids until the next day. I had to pick him up from camp, and yeah. So, in my opinion, Marijuana Williams, I think the parents should have life insurance, and there should be a policy rider on that to cover the kids. So, that's just my opinion for all zero people watching. All right, what do we have here? Life insurance is that boring, crucial thing you need to see. A lot of these people are talking about just the life insurance. Yeah, life insurance is great. I love life insurance. I really, really do. But more importantly, well, not more importantly, but I think life is important too. I think making memories with your family is also important. Tell them you love them. Doing all the things. You're going to be a memory someday, guys. One day you are going to be a memory. Like no one's going to be able to send you to call you or send you that text message. So, make good memories. And yes, I would absolutely get life insurance. I'm not sure if that's the way to convince people to get life insurance or not. I think it's more about protecting the family. Oh, what do we have here? Okay, this is why I do what I do. Life insurance is about you. Okay, yeah. Yeah, yeah. I mean, these are words. These are good words that she's using here. Uh, but I don't think people don't really get life insurance until they feel it, right? Like from my experience, right? Most people, I think you should have it if you have kids. For the love of God, get life insurance. But I don't think most people uh, feel the necessity for life insurance until they've experienced the death of someone, right? Like if they're at like a friend's funeral, roughly their same age, they see the impact of that family not having a life insurance policy, the GoFundMe, or whatever the case may be. I think that's when people really start to feel it, um, feel the need for life insurance. I don't think the word's going to do anything. I think it's a situation where people have to sit down and actually feel the impact of their loss. I think that's when people decide to get life insurance, and I hope you do that. I hope you sit down and you feel the impact of your loss and then decide to get life insurance, especially if you have kids. For the love of God, if you have kids. Okay. If you don't understand how life insurance your life insurance policy works, you probably shouldn't own it. I agree. I agree that you shouldn't. And here's the thing. This is another agent, obviously, but a lot of times, and I don't want to sound negative of the industry, although I am in many ways. A lot of times, people will or agents will get you a policy and not fully understand or not fully explain it to you. For example, I've talked to people who thought they had whole life policies and they just had term policies, and not just term policies, but renewable term policies. And what I mean by that is like they had a policy that would increase in price after the first year and then every 5 years, and it canceled after the year after they turned 80. And then once you turn 80, the price of anything is just going to be insanely high. So the person was paying on this policy was increasing in price. They kept doing it. They kept paying it. And then they turned 80, and a lot of times carriers won't insure them, or if they do, the cost is just too much for them to handle. So you should definitely understand your policy. I've talked to people who thought they had $300,000 worth of term insurance. It turns out it was like $300,000 worth of accidental. It was one of those instances where the price was too good to be true. It was. So the agent selling it to him, told him that if you go outside tomorrow and you get hit by a bus, your family gets $300,000, which it was true, right? But if he died from natural causes, then $0. And I've known people, or I've known instances where people were sold a policy that had a 2-year waiting period, even though they didn't need the 2-year waiting period. Um, and the same thing. So yeah, if you have a policy, make sure you work with someone you trust, and make sure you understand it. So I mean, I don't disagree with this sentiment at all. Okay. Okay, here's an example of the power of life insurance. So $25,000 whole life policy on a newborn girl can cost around 21 a month. If she lives to 92, based on life expectancy, it could grow to over 113,000. All right, so I am not a huge fan of that. So essentially, what this person's saying is, like, if there's 25,000 a whole life policy on a newborn, and she lives to 92, then the death benefit would be $113,000. Okay, all right. Well, let's do the math on this. We're going to do some math here, guys. All right. So what they're saying is it's going to reach $113,000. So $21 a month. So 21, and what was it? How old were they going to live to? 92. So $21 a month, living to 92, and the total was going to be $113,000. Okay. All right, so here is where I disagree with the sentiment about that. I think that it should be a rider added onto it. But I want to do something real fast here to kind of show you why I don't like that. Let's see what we got here. All right, so starting amount is 0. We're going to do 92 years. We're going to do 6% annual return. And how much money is she contributing per month? And let's see, or per year, $252 a year. We're going to see how much this is going to be. Okay, so roughly the same amount, provided a 6% return. Oh, no, wait, hold on. Yeah, wow, okay. So here you go. Here you go. So if they took the same amount of money, right? If the parents, instead of spending the $21 a month for the whole life, or for the $25,000 worth of death coverage, and getting $113,000 when they're 92, if that same family would have started an investment account, putting in the $21 a month, and this person lived until 92, assuming that they still contributed to it, at the end of 92 years, they would have $10,969,448 as opposed to the $100,000. So that's why I'm not a huge fan. I do think kids should have life insurance, but I think it should be an add-on to an adult life insurance policy. This is how I look at it. We take risk. Life insurance is our protection. It creates generational wealth for your family. Yeah, some life insurance can create generational wealth. For the whole life, I think whole life is best suited, in my opinion, for final expenses, for burial and cremation. As you saw earlier, I did the investment calculator, so I think it's a good vehicle for final expense for sure. And for term policies, it's not really a generational wealth creator as much as it is a generational wealth protector. For example, if you're 35 years old, you've got 3 kids, congratulations, and you're working on paying off your house to build up your retirement account, your income is crucial. to the family, then what the term policy does is it protects that. Like it says that, okay, John or Susan or Sally, they're working to pay off the house. They're working to raise the kids, to build up their investment account. And if something were to happen to them in the next 10, 20, 30 years, we were going to step in and replace that void, fill that void, that financial void left behind. So as far as the generational wealth aspect of it, um, yes, it's definitely a protector for that. For senior citizens, if like a family has to come out of pocket for your funeral, then that can definitely set them back 6 months, a year, maybe longer, depending on their financial situation. As far as building generational wealth, there are IULs available. The only thing I don't like about IULs is the first 3 years of the policy goes to fees and agents. It does build up, pretty fast after that. It goes with the market. So if the market goes up, your policy goes up. If the market goes down, your policy doesn't go down. But I think those are wildly more expensive than a term or a whole life policy. So typically, the people who get those are high net worth individuals. So yeah, the best way to build generational wealth is to raise your family the best you can to pay off your house and work on your retirement accounts. I wouldn't count on a life insurance policy to do that. I would definitely count on it to protect that, but my recommendation is not to use life insurance as an investment vehicle. That's just me. Okay. And I say that because if it's structured incorrectly, the agent's going to get paid a lot of money. The insurance company is going to get paid a lot of money. And yeah, so, okay, what do we have here? Life insurance expensive. Hmm. Someone just posted a spot of where Primerica life insurance premium was drafted from an account. Yeah, okay. But yet again, I don't think it's the expense of life insurance that stops people from getting it. I really don't, right? I think it's the fact that most people don't think they're going to die, or they don't think about it, right? They don't think about the financial impact that it's going to have, and they don't want to think about it too. Like that's another thing. People are happy not thinking about that until they absolutely have to, or until it's too late. So I don't think it being expensive. It's so for younger people, it's so inexpensive. Like it is insane how much life insurance somebody can get for $50. How much coverage they can have for 30 years for $50 a month. I don't think it's the expense. Uh, uh, okay, so this person got married and got life insurance. Okay, that's a good time to get it, right? Like if you're married and get life insurance. I did when I got married. I got life insurance or added to life insurance. Um, I don't think it's as important to get it when you get married as it's not as important then as in when you have kids. I think having kids is going to be the time where you absolutely positively need to have life insurance. Uh, okay. Hmm. This is from the Wealth Warehouse podcast. I'm just borrowing my own money. Reality wealth check myth. Taking out a policy loan means you have to borrow your own money. This is an IUL thing. One of the big, I'm assuming this is IUL. It's where they're trying to get you into an IUL policy where you can borrow against it. I think it's depending on the company, it's like maybe a 4 to 5% interest rate. And if you die, then your family just gets the remainder of the death benefits. But that's what that is. Uh, I don't recommend them for several reasons. I've already mentioned a few, but one is I would get what's necessary. Like that's just my recommendation. U USBA. I'm not familiar with that company. Life insurance only deals with death. True or false? Oh, this is from Nigeria. I'm not going to answer that. I'm not sure. Familiar with the policy structures in Nigeria. Okay. All right, here's Stephen Million, who says, I've been trying for 3 weeks to find a reliable life insurance policy because I'm getting older and have no coverage. I don't want my kids to worry. I've been turned down several times due to health conditions and would really need something with no waiting period. I hate having to bring this to Facebook, but I'm running out of options. Hopefully someone will see this and offer suggestions. Thank you. All right, well, the odds are if you've been turned down, if you've been put into a 2-year waiting period by uh, a few companies, odds are it's going to be all of them. Typically, they use the same morbidity tables and same risk analysis, or close enough to it that if you're denied by one company, you're probably going to be denied by all of them. There could be some exceptions out there, but it would really depend on what kind of conditions you were denied for. And this is rough. Like this is, it looks like he's getting older and he wants some life insurance. And I've seen this. I've seen this, like people in their 40s who just had a kid and they were diagnosed with a condition where they were just out of the life insurance pool without a 2-year waiting period, without paying more money. So my recommendation is if you're between 30 and 45, go ahead and get a life insurance policy that's going to take you through to retirement. All right, so normalize getting life insurance while you're young. I would love to, Danny. I would love to. I would love for every parent to have a life insurance policy. Unfortunately, half of them do not. All right, 18 to 25. Can I insure them with 75,000 worth of coverage for 19? Okay, life insurance quotes and examples. 18 to 25, I can insure them with 70,000. Okay, it looks like Cantrell is selling whole life insurance. Uh, perhaps he is selling whole life insurance. Yeah. I don't recommend whole life insurance for people these ages. I really don't. That example I provided earlier about the investment difference, I would recommend if someone is this age, 18 to 25, it's $19 a month. So roughly all of them are around $20 a month. So let's take a look. We're going to take a look here, guys. All 0 of you here. Apparently no one wants help with life insurance. So we're taking a look at all these examples here. This is why I wouldn't do it, right? And we can get through the investment component of it. We can run the numbers and see where it stands. But so let's say somebody is 26 years old. What would their cost be? Let's say if the 26-year-olds, maybe they've already got a kid or two, and we're going to take a look here and see. All right, so let's see what we're going to do here. We're going to take a look at 26. That's what we want to do. So what would 26 be? That would be 0601 2000. Do not smoke. Let's go for the lower rate. Let's go for the female. South Carolina, we'll say excellent health because I'm assuming that's what he's quoting. And let's take a look at $500,000 worth of coverage. And we're going to do it for a long time because they're young. We're 30 years. $22 a month. So this is what I'm talking about, right? Like the whole life insurance policy, it's good. I think it's best for final expenses personally. But a 20-year-old for 30 years have a policy all the way till they're 50. And this isn't the last policy too. Like when she has maybe a kid or two, she's got a mortgage or something, she can add on to that. She can get additional coverage. Banner term allows you to add on within the first, I believe, 3 years. So without your health condition changing. So they'll use the same qualifications that they used before to add on more. So would you rather have $500,000 for 30 years at 22 a month, or the 75,000 for 21 a month? So I mean, I'm not opposed to people getting whole life if they're younger. but I think the money could be better used in investments and just have a larger term policy. Like the money you're going to make in your investments is going to outweigh the money that you're going to pay for or you're going to get with a whole life. Like if you're disciplined and structured enough to maintain that investment each month, you're going to have more. That's just mathematically true. All right, so what do we have here now? This is how do agents get paid. Okay. I'm young and healthy. Do I need life insurance? I see a kid, so the answer is yes, absolutely. Right here. There's your answer, right? If you're thinking about life insurance, you got one of these. You got one of these right here. Right here. See that? If you got one of these guys, you need life insurance, right? No exceptions. Right here. All right, you need life insurance with living benefits. Living benefits. All right, let's talk about living benefits. Living benefits are cool. They are cool. The biggest one, and I think I don't work with any companies that don't have this benefit, and it's no additional charge. It's the accelerated death benefit. That means if you're diagnosed with a critical illness, that they will go ahead and advance you when a critical illness, like you've got 12 months or less to live, they'll advance you 75% of your policy up to $500,000. I think that is a great living benefit. Now, there are companies out there that offer to pay your premium for 2 years if you become ill. I think there is a company out there that will pay your mortgage for 2 years or for 12 months if you become ill. But the thing with those, they are very expensive add-ons, right? And for me, it's about getting what you need and spending the least amount of money as possible to get the best quality. So living benefits are cool, but don't let them get you a policy that should cost $40 a month and have you pay $100 to $150 a month, if not more, right? So that's what. Just be careful with that. The same thing with return to premium policies. Return to premium policies, they sound fantastic. You pay into your term policy for 20 or 30 years. At the end of the 30 years, you get all of your money back. However, what you're doing, you're paying four times more for a return to premium than you would for the standard policy. But you get it all back, you say. Yeah, you do, right? But if you took the difference of what you paid them and you invested it, you would have a lot more money at the end of 30 years. So I don't like that. Now, I think if you're the kind of person who, you're not really good at saving, or you're okay with like a 0% interest, a savings account with 0% interest, then a return to premium might be for you. I don't recommend them personally. I think you should spend your money in better ways, but that's just my opinion. Look for recommendations. Who does everyone use for life insurance? All right, for me, I use Banner Term. That's where I've got my term policies with. For whole life, for members of my family who need whole life insurance, it's Mutual Omaha. That's where I have it. I'm the agent. I think I'm the most honest. I'm pretty sure I am. No spam calls, no pressure. Apparently, no viewers. But yeah, Mutual Omaha, if you're relatively healthy, senior looking for a burial coverage, and Banner Term if you are young, you've got kids, and you need a large amount of coverage. Okay, what do we have here? All right, 4 out of 10 Americans age 65 or older don't have life insurance. Many believe that they're too old to get coverage and assume that they don't need it anymore, but life insurance can still help cover the cost of funeral and final expenses, paying off remaining debt, leaving a financial gift for the children, helping surviving spouse maintain financial stability. Okay. All right. So here we go. Take a look at this. Yeah. 4 out of 10 Americans over 65 don't have life insurance. That is absolutely true. The only time you're too old, like the older you get, the more it's going to cost, right? For sure. Especially if you're around 70 or so, 75, that's when it's going to really start to skyrocket, just because of the life expectancy of people in the United States. But yeah, cover funeral and final expenses. Absolutely agree with that. That is for whole life. That is what you want. Paying off remaining debt. Whole life insurance policies at that age is going to be really high, and I'm not sure what kind of debt you have. If it's debts just in your name or debts in your name and family members' name, that could be something that you want to consider. Leaving a financial gift for the children or grandchildren. Okay, so my recommendation would be, first recommendation would be to get a policy to cover the final expenses first, right? That's the where we're going first. That we want that taken care of. We don't want your spouse or your kids to have to take care of these expenses. So we look for that, and then we would kind of go, we'd see what else we could do. But yeah, that's where I would start. All right, what do we have here? What happened for fair? What happened? What would happen to your family financially if something happened to you tomorrow? Oh, they'd be fine. Mine are good. I've got life insurance. Completely fine. In fact, I have a food tester because I've got so much life insurance. Okay, what do we have here? I already have life insurance. It's enough. Okay. Do you have life insurance at work? That's a good question. I've got my personal life insurance. Life insurance through work is like icing on the cake, guys. Like if you got life insurance through work, if they offer it, absolutely take it. Absolutely. Usually it's a group policy, which means that the cost of your insurance at work is going to be based on the number of people you have and the average ages of the people. So if you've got like a young company, then the price is going to be fairly inexpensive. And if they offer additional, I think most companies offer like 1 to 2 times your salary in addition to the one that they give you. So you got an opportunity to get like $150,000 worth of coverage from work, and for a decent price. So yeah, I would take advantage of that, but I would not depend on them exclusively, because I don't know if how your company works, but most of the companies that I worked for, especially corporate companies, like if there's an opportunity to save a dollar, they'll save a dollar, and you can read into that what you will, but I would definitely not count on the work policy as an exclusive life insurance policy. Absolutely not. Real life quote: 30-year-old non-smoker needs 200. Oh, so this looks like it's in Europe. 30-year-old non-smoker needs 200 to protect their mortgage, cover 30 years, £6 a month. Wow, that's in. Let's see. Now I'm curious. I'm going to take a look and see if that is 30-year-old 200,000. Okay, let's see if we can do that. 30 years old. 200,000. How much is $200,000 for a 30-year-old healthy non-smoker? $14. $14. So apparently it's cheaper in the UK. Who knew? But yeah, $14 a month. That's well, actually, I can probably go. What did they say there? Oh, that's a 30-year. Okay, wow, that is really good actually. £6 a month. Wow, it's insane. Is that real? Okay. Hey, cheaper in the UK. Okay, life insurance awareness. Okay, that's $40 spent on 1 meal could have paid monthly premium for your 500K life insurance policy. Yeah, you could have. Absolutely could have. If you're married or have kids, or just know you need to insure your life, please comment, send me a DM. Yeah, no one's going to do that. No one's going to think about that. Yeah, $40 a month. Yeah, you can get a good life insurance policy for about $50 a month. And I think a lot of people under 40 can get it lower than that. And I don't think people really consider like the cost of maybe like a meal or anything. It's just they don't think they're going to die. They just do not believe that they're going to die. They don't sit down and think like, hey, what happens? What happens? I've got 2 kids. If something happens to me, what does that look like financially? Most people will not do that. They absolutely refuse to do that. Now there are some people who do, and likely do that, and they get life insurance. But most of the time, when you see these unexpectedly passed posts on Facebook, yeah, most of those people, half of them only have that work policy, which is good, but it's not going to last forever. It's not going to last long enough. I can tell you. Like after the work policy is done, the family is pretty much in a bad situation. This is your sign to get life insurance. I think the sign to get life insurance is when you have kids. Okay. Okay, this is someone trying to recruit for life insurance agents. Uh, so now, who sells life insurance? Looking for recommendations. Hmm, that would be me. I think this is I think this is an example of one of the people I was talking about where they want engagement. So if you go online and you look for life insurance, what they're going to do is they're going to bombard your inbox, right? They're going to just get you here. See, look at this. All of these recommendations. All right. So they're trying to get their engagement up, which is a clever trick, and it kind of speaks to the nature of life insurance agents too. Get up to $20,000 in life insurance cash benefits. Okay. 20,000, that is not an unreasonable amount to start with. I mean, it might be a little bit higher, but that should definitely a Lincoln Heritage. Oh, okay. Yeah, Lincoln Heritage, like I said before, they are a great company. They are really good. The only thing is they are a little pricier than the other ones, but yeah, they are good. I would, even though I'm not affiliated with them, if you have a policy with Lincoln Heritage, you're doing okay. I can promise you. Nurses care for everyone who protect their families. Oh, I like this. This is a niche. Like nurses care for everyone, but who protects your family if something happens to you? All right. Well, somebody might be at the door here, guys. Oh no, it's just offline. So okay, so life insurance. So this they're catering to specifically nurses, and this happens a lot, right? You'll see life insurance for veterans. You'll see life insurance for truckers. You'll see life insurances for teachers. Like they just target a specific group, and it could be because they want to work with that group, or maybe they were a part of that group at some point in the past. I know there is a veteran group out there that I think is pretty good. That it's comprised of former military personnel, and they're really good. Truckers, I'm not sure about the trucking advertisements that I see. I don't know if these people were former truckers or not, but yeah. So they're focusing on a specific niche. What else we got here? All right. See, affordable life insurance for over 55. I want real experiences in those who've had to renew later in life. Do not just give me insurance people's name. I know plenty. Okay. Yeah. Yeah. For this one, over 55, it looks like he's renewing it. So I'm assuming that he had a term policy. Maybe he got it when he was 25, 25 or 35, possibly with a 20-year term, and now he needs to renew it. For that, you are older. My recommendation, if you are doing term policies, which I think are the best for younger people, especially, is to like when you're 35. That's when you need to look at the policies that you have. 35 or 45, somewhere between those ages. Look at the policies that you have and see how long you need them. Right? My recommendation is to have that all the way through the retirement, all the way through. And if you're 35 and you've already got like a couple smaller policies, yeah, I would look at the cost of combining that into one larger policy and maybe going to the age of 65 or adding additional coverage to take you through to 65. I'm looking for life insurance. I have it through the Knights of Columbus, and the premiums have gone through the roof. Can anyone recommend a good agent or a good company? Knights of Columbus, it sounds like this person's got a renewable term, which means that every 5 years they reevaluate the policy based on the new age, and then the prices are assessed based on the new age. So you might have started with like a $20 a month policy, then you turned 30 or 25, and then it became like a $40 policy, and then so on and so on. So always read the fine print, and always make sure that people explain stuff to you. Friday is a great day to check one important thing off your list. If you've been thinking about life insurance and not taking the first step, I would love to have a free no. Yeah, I bet you would there, Brian. Yeah, it's a great day for sure, Brian. But I don't think people are going to start thinking about it all of a sudden, not unless they face like consequences of not having it, or they see someone else face those consequences, or they sit down and actually think about what would happen to their family if something were to happen. Like most people don't wake up and like, hey, I need life insurance without some kind of catalyst. Mm, they know that. People know life insurance isn't for them. It's for the family. And I think at this point, like people have seen this so often, it's just fallen on deaf ears, honestly. Uh, all right. My mom has dementia. I just want to be. Is there a life insurance I can get? My mom has dementia, and I want to be prepared. Dementia is another factor, another thing that could cause a waiting period, depending on the stages. And also, if the mom has dementia, then that also means that there would have to be a power of attorney, someone with power of attorney to sign her up for the life insurance policy. So let's take a look here. Dementia, what is that? We'd have to go, I'd say probably around 70, maybe. So we'll take a look at dementia. So we'll do, for this example, I'm going to assume that she's around 70 years old. I think that's about early onset, possibly. And we'll say she's 70 years old. She's got dementia, looking for $10,000 worth of coverage. See, it's all going to be guaranteed issue. There's going to be a 2-year waiting period. You're going to have a power of attorney. Some of these companies have 3-year waiting periods, but most of them are 2. So that's one thing to look out for. Yeah, the biggest recommendation I have is, well, one is if you have kids, get life insurance. I think I mentioned that like 1,000 times. So I'm going to keep mentioning it until it seeps through. But yeah, like dementia is going to be a 2-year waiting period. The best thing to do is like get it when you're younger. Like if you're 65, if you're going to retire and you want to get something to cover the final expenses, go ahead and get it. It's going to be the cheapest then. You can actually get more in coverage and pay less. That would be my recommendations. If you wait a little bit longer, I would just kind of go for what you need. All right, life insurance ain't for you, it's for them. They know that. They all know that. All right, I've seen life insurance policies as low as 20 a month. Okay. Okay. Life insurance is only for the elderly. Short answer, no. Correct. It's not. If you got kids, get life insurance. There shouldn't be a parent out there that doesn't have a life insurance policy on themselves with young kids. Zero parents. Did you know over 40% of Americans don't have enough life insurance to protect their loved ones? Let's change that. Still, deaf ears, man. Deaf ears. All right. Most people don't avoid life insurance because they don't care. They avoid it because no one explains it in a simple way. Okay. That could be true. That could be true. Looking for life insurance is extremely frustrating, and no one really ever explains it to them. The biggest two, I would avoid IULs unless you make over $250,000 a year and you don't mind losing money for the first 3 years. But for most people, it's going to be a term life insurance policy or a whole life insurance policy. Now, the term life insurance policy is going to last for a specific period of time, like 10 years, 20 years, 30 years. Some carriers actually go up to 40 years of coverage. So this is going to be a large amount of coverage, like 500 or 200,000, 500,000, million, 2 million. worth of coverage for a very little bit of money, like 25, 50, 75, $100 a month. And it's going to last a certain period of your life, a certain term of your life. And why you get this is because you have young kids or you're paying off a mortgage, and for the next 20 years you need to have that protection in place. For the next 30 years you need to have that protection in place in case something happens to you. So it's really inexpensive, it's a large amount of coverage, and it protects your family for when they need the protection most, right? That's term policy. That's what I would recommend every parent have, because if you got the same amount in whole life, you would be paying 20 times more. Easy. So now, whole life insurance policy, I think that whole life insurance policies are best suited for final expense. That means that it's going to be a smaller amount of coverage. It's going to be a larger amount per month, but it lasts your entire life. And these policies are best used for a burial or cremation. So those are the big things right there. Yeah, there are 2-year waiting periods. We covered that, where like if you have major health issues, that there will be a 2-year waiting period. And the renewable terms, I would avoid those. That's where the policy keeps increasing in price. Don't get those, and make sure that it's explained to you. All right, so those are all the YouTube or Facebook things. So, right, what do we have here? And I think I've had 0 viewers thus far. Yeah, the biggest thing, guys, like if you're thinking about life insurance, that's fantastic. If you're not thinking about life insurance, I would urge you to think about life insurance, especially if you have young kids. For the love of God, if you have young kids, think about life insurance. Think about like what happens if you don't wake up tomorrow, or if you don't make it home from work. What does that look like financially for your spouse and your kids? Right? Think about that. Think about put yourself in that situation. Like what happens if you don't make it back? Right? Think about that. Really think about that and see if it's worth the, 30, 50, $70 a month to make sure that they're going to be okay. I guarantee you, if you think about the impact that you would have, the financial impact you would have if you died to your family, that you would spend the $30 a month, $40 a month. And you don't have to get it from me. That's fine. I can show you other companies. I can show you how to do it. Whatever the case may be. But like seriously, if you have kids, right? If you have kids under 18 that depend on you financially, please, 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 please think about what happens if you're not there, right? Don't think about you dying when you're 90 or 80. Think about like what happens if you pass away tomorrow or next week, because so many parents do. Yeah, they just do. Like they do. Right? There's I think roughly 6,000 kids every week, every single week, under 18. These kids are under 18 lose a parent. 6,000. It's around I think it's around 850 to 1,000 a day that kids lose a parent. They're not going to, these parents aren't going to make it to the high school graduation. They're not going to make it to the college graduation. They're not going to make it to the wedding or be there for their grandkids to be born. They're not going to make it. It's just, this happens like all the time. Like, I'm sorry, I was supposed to be for senior citizens, but yeah, I want more people to think about life insurance, Um, yeah, 49 years old, unexpectedly passed. This is what I did. I went to Facebook and looked at unexpectedly passed. 49 years old, guys. 49 years old. Look at this. How old is this person? This person is super young. Look at that. She can't be old. Cannot be old. Not sure the age, but I'm guessing 30s. Look at this. Unexpected kids. Got kids. 1, 2, 3, 4. 4 kids. People just don't think about this because they don't want to, but you guys need to think about this. 28 years old right here, unexpectedly passed. All of these unexpectedly passed. His 2 kids, 2 kids, guys. 50% chance, no life insurance. You think he thought about it? Nope, probably not. This, another one. All these aren't old people, guys. Not old people. 62, right? See, life insurance policy goes through to retirement. Unexpectedly passed. 41 years old, unexpectedly passed. This guy's a little older, but unexpectedly passed. Okay. More people unexpectedly passed. Like if you have kids, for the love of God, I can't stress this enough. I cannot stress this enough. Get life insurance. Look at this. Husband, unexpectedly passed. It's like 2 kids right there. Unexpectedly passed. Sergeant, unexpectedly passed. These people are so young, so young. And oh, poor dog. Unexpectedly passed. Look, unexpectedly passed. Look at these people. Like most of these people had plans this week. They had plans for the 4th. Most of these people had plans for the 4th. Dying was not on the plan. 72 years old. Okay. A little older. Yeah. Hmm. I'm sorry, guys. It frustrates me when parents don't have life insurance, especially if it's so inexpensive and it provides so much protection. Parents of young kids, like kids under 18, every single parent should have this. Every single one should have it. Um, I don't think there's very many excuses. As long as you can get qualified for it and you're not like a multi-millionaire, you should have a policy in place. I'm sorry. 55. Look at that. 55. 50. 26. 50. All of these people, they thought they were going to be here this week. Like all of them. They were like going to hang out with the family at the cookout, going to shoot some fireworks, going to make some memories. No, their families can't call them anymore, can't text them anymore, can't do any of that, right? You know, and it's horrible. And you can't avoid death, right? I unfortunately, it's going to come for us all. So make some memories. Like if you are around this 4th, make sure you have a good time. Yeah. All right, guys. Well, it is 11:30. I've been at this for an hour and 20 minutes, and I would be happy to answer any questions that popped up, but unfortunately, I'm getting no traction on this. But I would be happy to answer any questions that you have. If you want to email me, text me, or anything like that, free of charge, no obligations, no pressure. If you're tired of the spam calls, you got questions about life insurance, good companies, what you can qualify for, how much it'll cost. And I'm sorry, I got to get back to the parents again. I really do. Young kids, people with young kids, you need the life insurance. Nope. Uh-oh. Did I get fired? I don't think I did. All right, let's get my banner term page here. Yep, this is my personal page for banner term. If anyone has got, if there's any parents out there that need life insurance, I would recommend it. So I'm going to do a 30-year-old, right? This is going to be a 30-year-old. Let's say they had their first kid. Let's say it's a guy. They're going to be in the same state I am, although the states really don't matter that much as far as the prices or at all. We're going to say they are in excellent health. All right, does not smoke, in excellent health. Let's say you had a kid, got maybe like a $300,000 mortgage, got a kid, got a spouse. Let's say he just wanted something to make sure that the family wouldn't be destitute. So he's going to look for a 30-year term, right? So he's 30 years old, he's going to have a policy for 30 years, just enough to cover the mortgage and have maybe $100,000 left. All the debt's gone. $500,000 in excellent health condition, $30 a month, right? $30 a month. Let's say you wanted to get to $1 million in coverage. $50 a month, guys. There is absolutely zero excuses if you have kids and you don't have life insurance. It's fast, it's easy, it's inexpensive. Yeah, Banner Term has been around, so let's see. I believe they've been around for almost 200 years. I love them personally. Legal in General, 1836. So they have been around 190 years, and their prices are pretty much the lowest. Like there are a few times where I believe Pacific and Banner kind of go back and forth, but for the most part, and it's only by like a penny. So these are the best ones. So if you're 30 years old, you got a couple kids, and it's not worth $50.80 to protect them. You know, I know it's worth it to you. I know it. I know you'd happily pay that, but I don't think you think about it. You don't think about like what happens if you're not here, because you don't want. It's too painful for one. But I would highly encourage you to do that. And if you did want a policy from Banner Term, my agent link is available. And also, you can go directly to Banner Term, where I get $0, and I'm okay with that. As long as you have kids, get the life insurance. You can cut me out of the equation completely by going to Banner Term. It'll be the same price. Let's say if you're 45 years old. What do you think? So 1981, right? Say you're a male and you're looking for 20 years to take you all the way through to retirement. 500,000. It's gonna be more expensive, obviously, but $45 a month. Look at that. Look at that. $45 a month for $500,000 in coverage for a 45-year-old male. I know you would do that for your family. I know it, but people just never think about it. And all of these advertisements that you see online about life insurance, they just don't hit home. Like it's just too transactional. It's too much about like the agent. I'm guessing like too much about like, hey, get a life insurance policy, work with me, but it's about your family, guys. You know that's it's not, the agents are not important. You know, I know they can be frustrating. I do, trust me. All right. Let's see. Hmm. All right, let's see. All right. Oh, two people. Cool. All right. Welcome. All right. Oh, two people. Cool. All right, Miss Woke Nerd. 35 female, good health. How much is 500K? All right, so let's take a look. Oh, getting feedback here. I'm not sure what that's about. Let me mute my microphone real fast and see if I can figure this out. Test 1, 2. All right, I don't think I have the feedback anymore. I do, in fact, have the feedback. Try it again, guys. Okay. So, Miss Woke Nerd, I do apologize about the inconvenience there. We're going to take a look and see how much it would cost you. 35 female, good health, non-smoker, I'm assuming. Let's say you are looking for 500,000. My recommendation would be for a 30-year term. That'll take you all the way through to retirement. And let's go for a 30-year term, 500,000. Be about $30 a month. Now that's assuming you're in excellent health condition, not a smoker, anything like that. But let's say you are in very good health. So we always want to get a price range, so you're not shocked if once they pull up your medical records, there's something else. So I would get a price range so between 28 to 46. If you're 35, more than likely it's going to be the top two. One thing that could impact it, like you could be in excellent health, but maybe if your BMI is a little high, that could have an impact on it. But I would assume that it would be 28 to $28 to $33 for $500,000 worth of coverage for 30 years. So I've included the link in the description before. I've also included the states that I'm not licensed in. I think there's about 8 or 9. You can go to this website. You can get a quote. If you're happy with the quotes, you can start the application. And they're going to ask for the basic information, right? This is for banner term, by the way. And if you want to bypass me completely, I understand. You can go directly to their website. The price isn't going to be any different. The only thing you get with this is you get to be my client. I get to be your agent, and that would be an honor. So This is what the application looks like. It's a standard life insurance application. It takes roughly 15, 20 minutes if you're fairly tech savvy. You know all the answers to these questions too. It's a good thing. You know your first name, your last name, date of birth, your address. You have to put in your zip code, email address, social security number. That way, whenever you pass away, they can verify that you are who you say you are. They also use this to pull up what's called a medical information bureau report. It's kind of like a credit check for your health. So over the past 7 years, every time you've been to the doctor or every time a medication has been prescribed to you, that's in your record. So they'll take a look at that. Cell phone number, they won't spam you. There's no spamming on this site. They're not going to collect your information and sell it to 50 agents, so they call you nonstop. Citizenship status, country of birth, and they're going to ask for your driver's license. That's just to make sure you're not, oh, excuse me, that you don't have any reckless driving or DUI in the past like 5 years, your employment status. And then after that, you'll go through the basic information, the amount of coverage, the beneficiaries. You'll have all the answers to the questions, believe me. Your information, your personal information, some more health questions, and then finally your billing. Now, for the billing, you'll have a couple of options. One will be a credit card. One will be your checking account. I would recommend the checking account just because the credit cards expire, but the entire process takes maybe 15 minutes at the most. So, if you have any questions, you can text me and set up a time to go over it. I'll be more than happy to help you. and and thanks for the question. I feel good. I like that. Actually got a question. All right, so this is it. I would recommend every parent who has kids under 18 to go through and do this, to actually think about what happens financially if they were to pass away. I think a lot of parents kind of avoid that, unfortunately, just because it's too painful to think about. And a lot of the advertisements really don't get you to think about it either, right? They're like, what happens if you die? But no one actually ever does that, right? No one People rarely sit down and wonder what happens to my family if I pass away. Just because it's too painful, don't want to think about it. Maybe they're young, super healthy, but I think it's something that needs to be done. You know, whether or not you get life insurance from me or with someone else, then I recommend doing that. So that is it, Miss Wokener. If you have any questions, like I said, you can contact me. Uh, and I would be glad to assist. So, oh, you are welcome. You are very welcome. And does anyone else have any questions? Well, it looks like you're still the only one here, Miss Woke Nerd. And are you married, or do you have someone else that would need life insurance as well? They can do the same thing, right? It's not. They can go online. They can get this quote. There's not going to be spam calls. You can figure it out. So there's that. Oh, I think I got a text message here. All right. So what do we have here? I was going through, just joining us. I was just going through the unexpectedly passed and how very, very sad that is. Like a lot of people who unexpectedly pass over the past couple of days, and that's one of the reasons why. All right, so let's take a look. I want to take a look at some of the fake advertisements out there, because there are a lot of fake advertisements out there. Oh, here's one from Ethos. This isn't a fake advertisement because it's coming directly from Ethos. I think life insurance companies, when they advertise directly, they're less likely to engage in, how do I say this? They're less likely to engage in misrepresentation as opposed to uh, data brokers. Because just because life insurance companies have to adhere to regulations both from the federal and the state governments. So if you see an advertisement from an actual life insurance company, it's more likely to be accurate than one that you see from an agency or from an individual. So my husband and I split everything 50-50. That's why I got life insurance. My $700,000 policy is $20 a month through Ethos, and it helps protect his future. Get your quote. So let's take a look at this. One thing you always want to look at whenever you look at an ad is look at the fine print. So this is for this is for 35-year-old non-smoker, and it is 10-year term. All right. So first of all, with this one, this is probably an actual quote, right? This is probably an actual price. But if you're 35 years old, I don't think a 10-year term is going to be long enough. So I think this is just an attempt to get you in there. My recommendation, as always, for a 35-year-old to get a 30-year term policy. So let's take a look. We'll compare Ethos, and they do have access. Like Ethos, they partner with several companies. I think they partner with True Vista, Emeritus. They also started partnering with Banner Term. So they do partner with some good companies. There are a few complaints that I have about them, but overall, they do partner with great companies. But I want to compare this price, the $700,000, $20 a month, to Banner Term. So she's 35 years old. We'll do that. We'll do 35 years old, which is 1991. Wow, that seems like so recent. So 35-year-old female. Let's say she's living in the states don't really matter that much for the price. It's going to be roughly the same. Let's say she's in excellent health. Oh, she does not smoke. I think that was one of the things mentioned. A non-smoker, and she's got $700,000. So it was a 10-year term. Like I don't recommend 10-year terms, not unless you're maybe 55 or so and you have to pay off some mortgages. But we're going to take a look and see how close we can get to Ethos's price of $20 a month. 700,000 for the 35-year-old female. Can we beat Ethos? $20 a month. I have faith. I think we can. I think we can do it. 13. All right. So that would be a difference of $7. Not a huge difference, but my recommendation would be to go with the 30-year term or at least a 20-year term. And that would be $36 a month. That's insane, right? A 35-year-old female, if she's got a kid or two kids, that's going to provide a lot of coverage for a very, 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 very little a month. You know, and I'd say at that rate, she could go up to $1 million and probably be under 50. Well, right at $50 and 15 cents. And this is what I mean by it's so inexpensive. And I don't think that I don't think if you have a kid, you should not have this. This is just It's too important, guys. Mutual of Omaha. Okay, coverage you're guaranteed to qualify for. Okay, so this is Mutual Omaha. This is a fantastic company, by the way. I do love Mutual Omaha. Not the cheapest, not the most expensive, but I think they are the best. Guaranteed you qualify for. So this could be a guaranteed issue policy. Let's see, Mutual Omaha no deals. No, it's just instant reliable coverage you can count on. Usually, when you see guaranteed to qualify for, typically that means it's going to be a 2-year waiting period. Not all of their policies are like that. They do have day one coverage, but if you have certain health conditions, one way to find out if they don't ask you any medical questions, like if there's 0 medical questions, it's probably going to be a guaranteed issue policy. Okay, what else do we have here? It's hot, but okay, this is not about. Okay, what do we have here? Colonial Penn. Happy Independence Day. Freedom means peace of mind. Get covered with Colonial Penn. Life insurance starting at $9.95 a month. Okay, $9.95 a month. I think I've covered Colonial Penn a few times. That is the actual cost per unit. The unit is the amount of coverage you get. So if you're 50, $9.95 could get you probably maybe $1,600 worth of coverage per unit. And if you're 85 or 80, 85, it might get you $300 per unit. Now, once you get the unit, the price is locked in. It's not going to go down or anything. So the longer you wait, the more expensive it's going to get. Colonial Penn, I think they are a legitimate company for sure. They are guaranteed issue, which means that there's a 2-year waiting period. It doesn't matter what your health is. If you could be in excellent health or you could be in horrible health, before it pays out for natural causes, it's going to be a 2-year wait. If you get hit by a bus or if it's an accident, then they would pay the full face amount immediately. But just be aware of that before you go into Colonial Penn. Some people do have major health conditions where they're going to have to go to guaranteed issue or guaranteed acceptance, but a lot of people can get day one coverage. So let's see. What do we have here? HElP Gerber Life. They're not bad. I think they do have a renewable term policy, which I'm not a fan of those, but Gerber has a good reputation for the most part. And 17 cents a day, what is that? Not much. Help protect your family. Yeah. I mean, I think it could be depending on what you're looking for. 17 cents could be it. I would probably budget like $1.50 a day, maybe 2. Okay. All right, New York Life. They have a great reputation as well. I'm trying to find some of these shady advertisements. State Farm, confused about life insurance. Okay. I haven't worked with State Farm life insurance and before. One of my neighbors, they have State Farm for their home insurance, and their house burned down. And State Farm has been good, right? They've been good, but they are having issues getting contractors to work with State Farm. Like State Farm was really ready to do things, so you can't really fault them for that. But like for the contractors, they had a really difficult time finding. So I'm not sure what that's about. And that could be an issue. Like larger companies sometimes have, just for in general, not State Farm. Like larger companies um, can delay payment a little while. Maybe it's not intentional. Maybe there's just so many of them. I'm not sure. But I know when I worked for one of the banks that they would pay their vendors, but it might not have been like the same day, same week, or sometimes even the same month. So that could be why they were having issues with the contractors. Okay. Cremation costs are rising, lock in $99 a day. Plans start at $13.99 a month. All right, so it looks like this is a membership for cremation. All right, so All right, so it's $13 a month. Like a cremation, direct cremation is still relatively inexpensive. Now, here's one thing to keep in mind. I'd say maybe 10, 15 years ago, most people were still opting for the burials, right? And that is where the funeral homes make most of their money. So back in the day, people were opting for burials. A lot more people, I think it was maybe like 5 or 10% did cremations. And so the funeral homes were making money. So they didn't lose very much money doing the cremations. I just offered people who couldn't afford the burials an option to carry out their loved one's final wishes. But what happened was more people started getting cremated as opposed to being buried, and the funeral homes are losing a lot of money. So one thing that I've noticed over the past 5 or 10 years is the price of burials have been stable, right? They've been fairly consistent. I haven't noticed too much of an increase in the cost of burials. In fact, I've seen a decrease in the cost in some areas. So, but the cost of cremation, it used to be like $900. I've seen it as high as like $3,000 now. So I think I think what the funeral homes are doing is they're increasing the cost of the cremation and reducing the cost of the funeral. That way, they're going to make roughly the same amount of profit either way. Now, this is my opinion. I worked with like 40 different states, but that's just what I've seen personally. All right, let's see. I'm trying to find some bad ads for you. Oh, the Andy Griffith. Yeah. Okay. Hmm. I've got an idea. Up some bad advertisements. I do have a collection of them, so you can get a gauge of what is out there. I think I saved them under scam. Let me see if I can find it here. A lot of scam advertisements out there, guys, for life insurance, especially. Here is one. Here is one that I've seen. Let's take a look at this one. All right, so ages 50 to 85, final expense policy, up to $25,000. Plans as low as $6.38 a month. Now, whenever you listen to this, I don't know if the audio will play while I'm using the microphone, but they don't say plans as low as $6.38 a month. They say $25,000 of coverage for $6.38 a month, which is just an outright lie. Just outright. There's 737 life insurance companies in the U.S. The last time I checked, and none of them will provide a $25,000 policy for $6.38 a month. Just not happening. What are these people doing? They're trying to get your information or trying to get you to call. So when you click on this, I don't know if they're going to let me do it. No, I don't think I don't think so. They know me too well. But when you click on it, it gives you an option to call them, right? So if you call them, what happens is it's transferred to a life insurance agent. So a life insurance agent signed up to have this marketing company generate phone calls. Now the agent might have signed up thinking that, hey, people were going to call about life insurance, like honest life insurance. But what happens is these marketers will do anything that they can to get get you on the phone, get people on the phone. So they will run advertisements like this. You get transferred to an agent. The agent's like $6.38 a month. They won't address that, right? They'll let's see how much it's going to cost for you, and then you're going to find out that 25,000 is going to be like 70, 80, maybe more depending on your age, and you're just going to not get it. So yeah, avoid these advertisements. Let's see if I can find any more here. Hmm. I'm not seeing many ads. Typically, I get tons of life insurance ads, right? This is someone's last weekend with 10 fingers. That is absolutely true. All right, I don't see any more fake advertisements. I think I do have some saved though. If you will bear with me. And I've done videos on these too. I have done tons of videos on these scam advertisements. But unfortunately, the videos I've done don't get nearly as many views as the scam advertisements themselves. See, this one has 949 people in there asking about that. This is a $25,000 benefit advertisement. So what they're saying is Social Security only gives you $250 for burial, but the state has approved a new benefit for residents where it's going to give $25,000 out. So it's an attempt to get you on the phone, right? To push a life insurance product on you. Like it doesn't mention life insurance in there, or it doesn't imply that it's in any way free, or it's any way it's going to cost you. It's set up to make you think that it's a free $25,000 benefit, that you just don't know about it, that you need to call, and it's a lie, right? No. All right, sorry, I got to text someone here. There we go. Okay, see, the benefit's just sitting there waiting for you to claim it, but people never will. This new benefit gives life insurance to U.S. citizens over 50. So I have been hitting this advertisement hard, trying to get people to be aware that it's fake. And I think that they actually took this one down. So I got a win on that one. I did get a win on that one. But let's see. That was scam number 3. I'm going to try to find some more for you. Scam advertisement. Here's one. There's so many. It's hard to. Yeah, here's one. 2 days left. American seniors can get $25,000 final expense benefit. All right, so essentially, like they say, final expense benefit approved, and when they say benefit, they mean like the death benefit, right? So the wording that they use in these advertisements are just right enough not to be considered false advertisements, right? They say that the state has approved a new benefit, which is true. Like every state has to approve life insurance to be sold in their area. So they're using that, they're stretching that, really stretching it. You may be entitled. You could be approved for this, which means like you'd have to apply for a life insurance policy and be approved. So they really stretch what is legal to the ends, and so they have deniability. But like any reasonable person watching this would assume that like there's a state's benefit of $25,000 they just need to call about, and when they call, not only they're told that there's no 25,000, but they're also told that, hey, let's try to get you life insurance. See what I'm saying? So this is just one of the many things that seniors go through. All right. Oh, sorry guys, I got a call here, although there's 0 people watching. All right, guys, it's been 2 hours, 18 minutes. I did answer one question from Miss Woke Nerd. If anyone else has any questions, feel free to give me a call, send me a text. There's no obligation, there's no pressure, there's no spam calls. Just honest information about life insurance, whether it's with me or with someone else, or if you just have questions, you can just ask questions. That's fine too. I can tell you which advertisements are bogus, which ones are legit. If you have medical conditions, I can kind of point you to the right carrier. It's not a problem. But I urge you yet again, uh, and no one's probably going to hear it, but if you have kids, young kids, if you have kids under 18, please, 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 please make sure you have life insurance in place. All right, guys. Till next time, have a great day and happy 4th.